Is Nvidia a complete fraud? That is what some investors are saying about the company after they reported their earnings just a couple of weeks ago. Investors are going through the financial reports and pointing out some irregularities inside of the financials, and they are claiming this company is like Enron, or after all, this company's one of their largest customers is actually Super Micro Computer. That company is obviously embattled in lots of allegations of fraud. In fact, the NASDAQ is threatening to delist the stock from the stock exchange for a second time. We'll go through these allegations. We'll point out what these investors are talking about. Is there credible evidence that Nvidia is committing some type of fraud and that a lot of the revenue and profits that the company has recognized over the past year, can it actually be fraud, or is this a buying opportunity for Nvidia? We'll also look at it technically on this chart. We'll talk about both of those things on today's show. What is going on, investors? Hopefully, guys are doing well out there. Welcome to the Semiconductor News Recap Show. Now, obviously, a shortened week from the holiday, so a little bit light on the news. So we're going to be talking about Nvidia today. Is this company a fraud? Because over the past year, shares have skyrocketed, up 186%, and even year to date, up 178%. Even over the past 6 months, you've done quite well, up over 20%. But some investors are claiming foul from the company when they go through the company's financials. As you know, this company reported their earnings just a couple of weeks ago. What the investors are pointing out is the fact that Nvidia's accounts receivable has hit a record high of $17.6 billion in the most recent quarter. We'll show that to you, considering just back in January, accounts receivable was only $10 billion. So you've had a massive 77% jump in accounts receivable over this company, and some people claiming this company is pulling forward revenue in a fraudulent way. Other companies have done this in the past, including Enron and Under Armour, to just name a few. Now, first of all, what is accounts receivable? Some of you might not know. It is actually a balance sheet item. Accounts receivable is usually up in the asset side because accounts receivable is money that companies owe you. It is often recognized as revenue, but it is money that is due to you at a later date. In the semiconductor business, as you can imagine, Nvidia produces these super expensive chips, and then they usually sell them to an intermediary like Dell, which we'll talk about later on today's show, or like a Super Micro, which then packages them up into servers and then delivers them to the customers. Now, instead of charging Dell up front for the semiconductors or charging a Super Micro up front, they run what is typical in business, some kind of term. So maybe it's a net 90. So after 90 days, the amount is due, or after 60 days, or maybe if it's in longer terms, depending on the relationships. Well, that goes into accounts receivable until that company pays their bills. Now, obviously, with Super Micro Computer and maybe other companies in this industry, you get a little bit nervous. And so the company does recognize on their balance sheet that they have 4 direct customers accounting for 18%, 13%, and 11% of their accounts receivable balance as of October. They have 2 direct customers back in January that accounted for 24% and 11% of this accounts receivable number. So this accounts receivable number is largely concentrated, at least in the most recent quarter, among 4 different customers. You have to assume that Super Micro Computer is probably one of these customers. Now, what we have to realize with Super Micro Computer, the allegations against them is not necessarily that they're running some type of fraud in terms of recognizing their own revenue. What was alleged, among many different things, was actually the company was setting up shell companies and driving business to family members or maybe even direct executives of Super Micro. So they're essentially setting up businesses to funnel money down the food chain. Now, obviously, without the proper disclosures, and maybe other investigations will lead to further fraud allegations against that company, but it doesn't necessarily mean that the company is broke and that it's not going to be able to pay their accounts receivable over at NVIDIA. Now, another thing that you have to realize with the accounts receivable number is you actually add it back into cash flow. So yes, some investors like these ones on X and Twitter and other places out there, they're looking at this accounts receivable number and they're seeing it balloon. We'll talk about it here in a moment as it relates to revenue and its percentage gain against revenue. But one thing that if you are nervous about this accounts receivable number not being collected, well, first of all, you could strip it out of the asset side and just take that number off of the company's total current assets if you want to. The other thing that you can do is you can actually come over to a statement of operating cash flows and understand that accounts receivable is actually stripped out of cash flow. That is because this is not actual cash. It's recognized as accounts receivable that this money is going to come in at a future date, but on cash flow, it's not actual cash received by NVIDIA. And so they actually have to strip it out. So even under that context, you notice over the past 9 months over at NVIDIA that they went from $16.6 billion of operating cash flow up to $47.5 billion. So even when you strip out this questionable accounting method or questionable or ballooning accounts receivable number, they still had an astronomical operating cash flow number. And given by the fact that the company isn't spending a lot on other things inside the company like property, plant, and equipment or paying down any type of debt, well, this operating cash flow of $47 billion over at NVIDIA pretty much goes to rebuying the stock and gets dumped into the cash balance sheet that we see on the cash and cash equivalent side went from $7.3 billion up to $9 billion, and marketable securities, which is also essentially cash, went from $18 billion up $11 billion to $29 billion. So this company is not in any danger, even if this accounts receivable line is not received, even if Supermicro goes completely bust and vanishes off of the face of the earth, even if these concentration of customers, they pay back a varying degree of this accounts receivable number, well, it's not a big deal, at least from the current balance sheet and cash flows of the company. Now, future revenues, future business certainly will be impacted. But another thing to keep in mind with accounts receivable is it's simply growing with the revenue line over at NVIDIA. Now, obviously, as share price has risen over at NVIDIA over the past year, over the past 5 years, any stretch of the imagination, the company has consistently grown its revenue. You would expect a company like this, as it's grown its revenue over the past year, and as you see, that this company has grown its revenue, represented by this orange line, at a very consistent rate over the past 4 quarters. And in lockstep, the accounts receivable line has also grown in lockstep with the growth in revenue. Now, here's accounts receivable as a percentage of revenue. Now, we do notice a large spike from Q2 to the most recent Q3, but I do want to note the scale of this graph goes by ones, and so you are going from 47% accounts receivable in relation to revenue to upwards of 50%. It is a larger jump. It is a larger percentage of revenue that the company is recognizing as accounts receivable. But one thing that we have to understand with NVIDIA is they're shifting to that new platform, that Blackwell platform. And I think you have a lot of customers, and we'll talk about it here in relation to Dell. You have a lot of people banging down the door. In fact, we have evidence not just from NVIDIA, but from other companies that you have a lot of companies and a lot of customers banging down the door of NVIDIA for Blackwell product. And you probably have a lot of commitments from Dell, from Supermicro, from HP, from other server makers, from Microsoft, from all of these key customers that the company recognizes here. They're all having huge demand for Blackwell. And so they are probably more than willing to place those orders with NVIDIA, create a larger accounts receivable number. And so when those Blackwell chips get delivered and manufactured, that will eventually be recognized as revenue. So yes, in conclusion, NVIDIA's accounts receivable number has grown, but it's largely grown in relation to their revenue number. And from a percentage of revenue, it has spiked over the most recent quarter, but I think we can attribute this to the fact that they've shifted to a new platform that has built up demand that far exceeds the current demand. We'll talk about that again when we get to Dell. I think you have a few investors that are trying to short this stock because when you do look at Nvidia technically, it has obviously gone on an epic run, and it is basically, especially when you move this out to a larger time frame, it has gone straight up in the air. And so short sellers see this type of price action on a stock and they try to find fundamentals inside of the company that reinforce some kind of short thesis. On top of that, you do have the situation over at Supermicro where the company itself is doing a lot of really questionable things. You've also seen more recently here on YouTube, numerous influencers that have pumped many shady type of stocks and companies like FTX and other crypto scams in the past. They're now on YouTube pumping Supermicro stocks. So there's definitely some red flags going on with that company. But overall with Nvidia, I think the strength of their business and the strength of their product line basically speaks for itself. And I think this is a lot of short sellers that are seeing their account go down in value as the shares of Nvidia continue to rise. Now, we've got broader macroeconomic stuff, and obviously we've got a new presidential administration coming into office. I think we're about a month and a half away. I think it's like the third week of January. Former President Trump will become the current president again, but President Joe Biden is not resting on his laurels. He is continuing to do things in the Oval Office as you'd expect him to do. He's still the president, and he is going to roll out new U.S. chip curbs on the country of China. We've talked about it numerous times here on this channel. High-end Nvidia chips, high-end AMD chips, high-end Intel chips, high-end chips across the board. Even the lithography machines made by ASML cannot be sold directly into China. Now, they're finding their ways through backdoor channels and other ways into China, and the country of the United States continues to try to close those loopholes. This is almost like a monthly thing. Now, the latest thing that they are going to target is high bandwidth memory. So this will impact the high-end chips because, as you know, the high-end chips made by NVIDIA, including Blackwell and even the H100s, they have high bandwidth memory. In fact, you get an exponentially more amount of high bandwidth memory on each generation that is released. So the Microns, the SK Hynix, even the Samsungs are going to be impacted by this new curve. Now, if you're not following me on Twitter, otherwise known as X, talked about this in a long thread and even gave you an outline dating back to 2022 of all the different things that has happened inside of the chip industry as it relates to these chip sanctions. Now, the question on everybody's mind now is what is current president or future President Donald Trump going to do in this case? It's largely expected that he's going to keep these sanctions on, but I think the difference between Joe Biden, among other things, the difference between Joe Biden and Donald Trump is going to be Donald Trump, you get the sense that he could relax these sanctions if China comes to the table with some type of other offer. Maybe they're going to buy farm equipment or farm crops or help some kind of constituency that matters to Trump. I think one of the most interesting things will probably be the first 100 days of the Trump administration and see how the U.S. and China relations kind of evolve just in the first 100 days. Will China take the stance, which I think they probably will, that Trump is basically a lame duck president? He's got a 4-year term, and who knows what happens after that 4-year term? Who knows who's going to be president? It's going to be a completely new regime in there. And so China might just take the next 4 years off and say, hey, whatever happens with China and U.S. relations, it could be reset or renegotiated in a future term. Or will Trump have enough leverage with China to bring them to the table early in his term to really impact these things? Obviously, it's a big question mark right now. And these are the exciting things as investors because you could have some mispricing of assets. You could have some large swings in terms of pricing and equity pricing going forward with Trump, as obviously he says a lot of different things. Just over the weekend, he talked about 100% tariff on the BRICS nations. He's talked about 25% tariffs on Mexico and China and Canada. He's talked about 60% tariffs on some goods coming out of China. So these types of things are going to flow across the investment community, and I think they're going to create some interesting buying opportunities. Now, one of the questions across investors' mind was, is Dell Computer a buying opportunity? Over the past week, shares fell by about 13.5%. Now, we're not going to get into the earnings because over on the channel, you have a complete Q3 analysis of the company's financials. We went through the balance sheet, the operating cash flows, and the profit and loss statement. So if you want to take a look at Dell there, you're more than welcome to do that. We'll look at it technically here in a moment. But as it relates to NVIDIA, we saw numerous references inside of the Dell conference call. And this probably sums up everything that you need to know about Dell, but also about NVIDIA going forward with Blackwell. This comes from Dell's conference call. One of the executives said, we saw a Q3 shift and a pretty rapid shift of orders moving towards our Blackwell design. The specific one that you called out, the GB200, that is now on backlog. So this is what we're seeing across cloud service provider industry. We're seeing with Dell. We're seeing with the component manufacturers. You saw a massive shift. It's almost like when the new iPhone comes out. If you need a new iPhone, and Apple historically releases their iPhone in September or October or whenever it is, there's really no use to get the new iPhone. Just wait a couple of weeks. And that's basically what these companies are doing. They're just waiting for Blackwell. And we're seeing across the board, these companies that rely on NVIDIA as a supplier, they're all saying that the demand is basically off the charts. They're basically backlogged. Again, to go back to what we talked about in the beginning, I think this explains the ballooning of the accounts receivable number. Although, again, that accounts receivable number is moving up in line with revenue. It would be a major red flag if you're looking at companies where their revenue is declining, but accounts receivable is increasing. That would be a pretty big red flag for me, but we're not really seeing that. And we did see a spike in the most recent quarter, but again, it's only 3%. It looks steep on this graph here, but it's really only a 3% spike. But I think it's related to what Dell is saying, is that they saw a pretty rapid shift in orders moving to the Blackwell design. Now, moving over to the technical segment, there are multiple buying opportunities. So get your pen and paper, because when you watch this video, there can be buying opportunities. The SOXX is still in a buying opportunity. Now, a couple of things to keep in mind here. We'll switch this back to a slightly broader view. We've got a weekly term. This purple trend is the long-term trend. This dates back all the way to 2008. This purple trend line has held. We are way over and above that. So we're expecting at some point this to give it back and revert back to trend. That would be a heavy buying opportunity if you were able to get that. Now, in the shorter term, it would be a pretty massive move. You go from 215 on this one down into the 160s. Not really expecting that, but it's possible that's something that could materialize. But you've been making a consistent of higher highs on this one and a series of higher lows. In that case, you've got a beautiful uptrend, so you want to buy the dip. What we've identified is what I call an intermediate trend. This one holds back to October of 2022, and that is represented by, maybe we'll change this to an orange line. This orange line has held since 2022. Anytime you've touched this line, it has been a buying opportunity. I've stepped in here on the SOXX, have a couple of shares of this. Now, to protect ourselves to the downside, you've got a series of lows here at 203, slightly more aggressive stop loss down here at 192, because if you break both of these lows, it's a much, much higher probability that you're coming back down to trend here. But if this level holds here, you are likely to come back, retest these highs back up here at 239. That would be about $30 upside, maybe back into the middle of the channel. That'd be back into the 260s, and make a new higher high. That would be back up into the 280. So you got 60, maybe even upwards of $70 in upside, and you can set this one up for $10 or potentially $20 in downside. Those are the types of risk rewards that I kind of like. Now, the SMH in a slightly different setup. It is currently sitting at the middle of the channel. It's waiting on Broadcom earnings about a week and a half from now. We'll preview those on next week's show. This one's sitting in the middle of the channel. Wouldn't call that a buying opportunity, but you have a buying opportunity with Mr. NVIDIA, and these opportunities don't present themselves very often. The intermediate trend on NVIDIA is back here holding since October of 2022. Here we are sitting right on it. The last time you had this opportunity was actually back in September. Shares of NVIDIA were at 102. Found support here on the intermediate trend and rallied all the way up to $150. So you had 50% upside just September, and that's what you're hoping for again with NVIDIA, is that you find footing here at about 138, and at the very least you make a new higher high back up into the 150s. So you got $20 in upside probably in the shorter term. If you want to protect yourself to the downside, you can set this one up very, very conservatively So you could risk just a couple of dollars, maybe $7 or $8 to the downside on this one, with the idea that the company tends to reverse very quickly off of this intermediate trend. That one looks really good. I'll probably step in on Monday and add to some shares that I already have. Now, AMD is holding this area at 130. It has slipped just below the longer-term trend. The longer-term trend is this purple line. It actually dates back all the way to 2015. So you got a near 10-year trend line that is holding here. We have broken through, but sometimes you break through these things. It's not that big of a deal. With AMD, if you want to step in on Monday, wouldn't blame anyone to do that, but I would have a stop loss on this one. Probably $10 lower at the most. You're risking 10 probably to come back up in here to the 180s. That is like a 5-to-1 risk to reward. Now, Broadcom, complicating the situation with Broadcom, you don't get earnings until the 12th, so you'd be stepping in before earnings. An intermediate trend represented by this purple line is holding, and you're on it. So if you want to step in on this one, you can, but you are at the top of a much longer-term trend on these ones. When you're at the top of these trends, and this is a company history-wide trend. You're literally at the top of a trend. Now, I know Broadcom's got great networking. In fact, we posted a video of the channel maybe about 2 weeks ago. This one's got great fundamentals, great trends. If you do pull back on this one, you're going to be very, very aggressive buying that one. Now, Intel in a shorter term uptrend, still looking quite good. We'll train this back to a daily view to show you how well this is held. In fact, Intel, if you want to, fundamentally, you have to ignore some things with Intel. But this is a buying opportunity. Again, you're playing a shorter term trend here. If you're one of these investors that you like to buy and hold forever, you've got diamond hand, laser eyes, those types of things. Honestly, I wouldn't even pay attention to the technicals most of the time. This is for people that want to make shorter term money, want to play shorter term trends. And some people laugh at these types of things, but like, this is how I make really good money. This is how I not pay bills. Like, I buy like really expensive stuff, watches, cars, expensive gifts for my wife. This is how I do it. Intel's holding this trend. It's towards the bottom, what you'd expect with Intel at this area. Fine footing here right at 23, move up, make a new higher high at 27. I'd set this one up pretty conservatively. I'd have a stop loss, maybe a dollar underneath this one. So you have kind of a 4-to-1 risk reward. You're risking $1 to make 4 to the upside. Just be mindful. If you set these up as a trade, don't turn it into a long position. So many amateur investors, what you do is you set it up for a trade here, playing the 4-to-1, but you don't put your stop loss in. Intel, for whatever reason, kind of craps out the bottom, and then all of a sudden you're turning it into a long position. If you're going to trade. If you're going to have diamond hands, have diamond hands. Don't mix the two. Now, Qualcomm, it's kind of in no man's land. It's sitting above the middle of the channel. You're waiting for that one to pull back. TSM is looking absolutely sensational. Just confirmed a new higher high. It's done exactly what we want it to do. It's starting to pull back. Still somewhat in no man's land. You're waiting for a pullback there. ASML is looking great, and it looks like it's found some footing at this level. I've seen some bullish calls on this one. We divide these charts in half with kind of a lighter green line. Anytime you're underneath that line, I think it's actually a buying opportunity, and ASML for several weeks has been a buying opportunity. Now, proof that some of our trade setups actually work and actually make money is NXP. NXP is a stock I've never owned. In fact, I haven't analyzed it all that much. But it was down here, and we said this on the show. You can go back and look. Go back to our timestamps and jump to the NXP segment. These were buying opportunities. When you touch the bottom of the channel, which again is represented by this purple line, and this purple line dates way back. I mean, I am really aggressive. When you hit these, this was like a 15-year price trend that held. Those really, really are important. And so I was very aggressive at that level. Down here about 216, you peaked up to about 238. You've pulled back a little bit, back to the 230s on this one. I peeled off a few, not at the top, but a small percentage. When you get these immediate bumps, I tend to peel off just a small amount, lock in a few profits there, and then you let the rest hopefully ride back up to the middle of the channel on this one. You probably still got another $30 in upside. ARM Holdings doesn't report their earnings for a while. This one's flagging out or making kind of a pennant formation. You're making a series of higher lows, not confirmed though by higher highs, but actually a lower series of highs. You're going to get a breakout in ARM Holdings. You don't tune into the show to tell me or hear me say that stocks are going to go up or down, but that is what's going to happen with this one. It's either going to break likely to a new high up into the 180s, or it's going to break lower and you're going to get an opportunity probably down at 100. Now, SMCI has had obviously a rocky few weeks, say the least, but it's still basically confirmed this downtrend. You're still making a series of lower highs confirmed by a series of lower lows. So this thing is swinging hard. If the momentum continues lower, you actually will have another opportunity much lower on this one. For it to actually break out of this trend, it actually needs to break above this cluster of highs up here at 48. So until SMCI gets meaningfully up into the $47, $48 range, you actually have to assume this trend is still intact. But you do have some sideways consolidation, which we've noted by this green box here. My assumption with this stock is it'll trade inside of this green box until its accounting issues and its delisting threats are behind them. Dell Computer is way overextended. We've only got about a 3 or 4 year price chart on this one, but it's well overextended above the top of a range. You're waiting for this one to kind of pull back into zone. You pull back into zone on this one. Really anywhere under 100 looks somewhat decent. Micron is essentially right at the middle of the channel, just hovering at those areas. Certainly the chip export ban on high bandwidth memory will impact this company to a certain degree. Lam Research is now at the middle of the channel. It's where you can do very light buying if you feel like it, although the trend and the momentum with this one continues to move lower. So you might as well, like ASML, wait till it gets a little deeper into the zone. And same with Applied Materials. These ones are selling off on those export restrictions. Obviously, that is why we're going to be monitoring President Trump's really first 100 days and see the relationship with China. See if China's going to be willing to come to the table, or if they're going to give the president the soft shoulder and be like, dude, you're going to be out of here in 4 years. We don't care what you do. You're going to be out of here, and probably the next person that is in there, unless it's like a Trump disciple, is probably going to just reverse a lot of his policy, and China maybe play hardball. But if they come to the table, if China looks like they're going to bend the knee and visit Mar-a-Lago, well, my goodness, you have a bunch of these stocks that have really been impacted by these chip export controls that have really started to be put in place since 2022 and really ratcheted up over really every several months. You get a ratcheting up of tension. Well, if those are loosened at all, you got a lot of stocks on this list that are set to run. Folks, that was the Semiconductor News Show for Sunday, December 1st. We've got 30 days left. Rest of the year, hopefully it's a good one. We'll obviously be back next week, and we've got Broadcom earnings in about a week and a half. We'll preview them on next week's show. Thanks for tuning in today. Good luck with your investments.